Trevor, and he is the king of short-term rentals. We've been doing a lot of meeting together. We're in a mastermind, and I really think that he is in the right space for the current economy. A lot of people that are in the commercial real estate markets are pencils down, on the larger multifamily. But I really think that the short-term rentals is, the game is on, and I'm really excited to have Trevor on here so he can tell us a little bit about his story, how he got into real estate, and what he's up to today.
Cool. Thanks for having me, Mark. Glad to be here.
Yeah. Why don't you start at the beginning and just give us a little background? Let us know how you get into real estate, and then why you're so excited about short term.
Yeah, man, that's a long story. I guess. Hold on. Whew, sorry about that. Had a little something in my throat. But kind of a long story. I get how I got there, right? Because it's like, where do you start in life? But there was a point where I was broke and hungry. So definitely, and I didn't want to stay that way. And but I knew I wanted to get into business of some sort, mostly into I was into health and fitness, personal training. I came out of the Marine Corps and was really, motivated about exercise and being in shape. So I thought that was the path to riches, is just being, really, a rock star, highly paid personal trainer. I didn't really have a really well thought out plan. I just kind of thought I wanted to make a lot of money in health and fitness, and quickly found out I didn't really know anything about business, which prompted me to go to business school, use my GI Bill while I was running a gym that I had started. And I learned through that I really didn't want to be in the gym business. I liked fitness and doing fitness, but I didn't like the fitness business or industry and personal training so much. And so made my way into finance, into loan originating. And that's where I really discovered the power of real estate investing. Was doing loans for people buying real estate. And I had studied finance in school. When I went to business school in particular, I'd studied finance as my specific major inside of the business world. There's marketing, there's business administration, there's, and I really gravitated towards finance and just studying the science of returns is what it's all about. And fun fact, I didn't really learn much of anything about real estate investing in studying investing and finance. I think I remember there was one paragraph in one class ever that I took one semester that was real estate investing is a thing. Now let's talk about securities and stock market, And so I get into lending just because I thought it was really cool. I had a pretty good understanding of debt, right? It's pretty basic financial concept. So I understood the product that I was selling really well. I had a mortgage. I actually believed in the product I was selling. So I thought it'd be easy for me to sell. And it was. I was pretty successful. I was also in the right place at the right time, but I also saw something interesting going on. I was like, wow, the returns that you can get because of the financing arrangements you can do, they're not available in any type of investment, right? If you're going to go buy an existing business, you're going to put down at least 35% on it to get an SBA loan, which would probably be the best type of loan you can get. If you want to buy stocks on margin, they're only going to cover 50%. And you can buy a piece of real property, with little to no money down, with conventional financing arrangements, with house hacking, things you can do with your primary residence. You only got to stay there a year, and then you can start renting it out. You can do that year after year. Just all the interesting things you can do. And even when it is a known investment purchase that you're doing, you only got to put 20% down. And so the way that you can finance it and make it cash flow, and it appreciates while you own it, it's like a growth stock that pays dividends. Right? It's unheard of, And so I was just really intrigued by it. So after a few years of doing loans, and then I was doing loans before interest rates hit the lowest point they ever had, and mortgage volume hit new records, shattered century-old records. And I was right there in the middle of it. And I really hated it on some level, because I was so busy. And I really for the first time in my life, I made good money. And also for the first time in my life, I understood what it really meant to trade time for dollars. And I needed a way out. And so I had access to these really attractive mortgages, right, that I was selling for people, originating for people. So I generated one for myself, bought a home, short-term rented it. And over the course of 18 months, picked up 2 more. So 3 in a year and a half. And by the time the industry changed back to normal with, normal and now high interest rates, I was ready to walk away. I had enough cash flow coming in from my real estate investments to cover my bills.
Nice.
And was sick and tired of the industry. So that's the gist, the overall story, I think, of how I got to where I'm at now, full-time dedicated to investing in short-term rentals.
Yeah. I remember we were talking a little bit offline a while ago about the different loan products that you have for the short-term rentals. And it's different than you would see in the commercial world, right?
It is. There's similarities and differences for sure. So it's like a hybrid, because it's perfectly practical, legal, inside the regulations to buy a second home at 10% down and rent it on a short-term basis. The technical guideline says something along the lines of, to finance it as a conventional second home, you have to occupy the home at some point during the year, like literally one night, and you've met the criteria, and you could rent it out the other 364 and just stay in your home one night a year. It's also got to be in a different city than you live. Mm-hmm. Then there's, you could buy something as a primary residence and rent out the rooms. It's perfectly acceptable doctrine. And then after a year of living in it, you can move out and rent out the whole thing. Nice. So those are two methods right now. They're just using conventional financing products. And then there are commercial loans available for short-term rentals. You can put down 20 or 25%, and the lender will underwrite the debt service coverage ratio based on short-term rents, based on projected short-term rents, not even existing. Right. Wow. And so, those products are new. And like, I see lenders, they start doing them and then they stop and then they start again. And there's always a few lenders at any given time right now. And this was unseen when I started originating, and when I started investing in short-term rentals, this was unseen. This is something that I don't think came out until 21 or 22.
Do you have to have a pretty good track record to get these products? Is that kind of how it works? Or they'll give you one, and if you do well and you actually hit your projections, then you're good. I'd imagine there's people in your space that are over projecting, right?
For sure.
I would guess.
Yeah. So there's a couple tools that these lenders will use to make the projections. And then they'll hit those projections with an expense ratio. And generally, with the last one, I incidentally applied for one the other couple weeks ago, and they wanted my track record. So yeah, they're not very transparent about what their guidelines say. And depending on the loan officer you actually talk to, they may say you do or don't need a track record. But anytime I've been in underwriting, they want to see my experience. So I absolutely think you got it. Yeah, you don't really get that product unless someone's guaranteeing the loan has a track record of operating short-term rentals.
And what do they use for your track record? Are they looking at like a Schedule E, or is it not even that formal? They're looking at like your VRBO history or something.
Yeah, they want an Airbnb. They asked me for Airbnb printout. Like, you can request your income record from Airbnb. So they asked for that. And it's a standard, like, I think they go back 3 years automatically when you request from Airbnb. So They asked for that. They asked for, they want you to prove that you own the house listed on, because when Airbnb does its printout, it shows you the address of the property generating the income that is on the income statement. So they want proof that you own the home. And then, so that's one thing. They'll also accept property management experience. So they want some equivalent documentation for that you are in fact the property manager for the properties listed on the income statement. So either being an owner operator or a property manager of short-term rentals, they're looking for proof on that.
Okay. And now, as an operator of short-term rentals, let's say you've got some clients that own, maybe I've got one and I want you to manage it. Do you have to have any special licensing? Like in New York State, I know I've got to be a licensed broker to be able to do term rentals. Is there any regulation on the short-term rental?
It's kind of like Bitcoin. I feel like it's like, no one knows for sure. I hold a real estate license in Arizona. And I remember specifically when I was studying for the course that in order to property manage, you don't need any special designation. I know in Nevada, where I've also spent a lot of time, actually in Nevada at the moment, they, to property manage, you need a PM designation aside from a real estate license. So that's the first thing, is it's state by state. Also, I know in Arizona, it for sure says in the guides that, to a property manager is anyone who manages properties that aren't their own for a fee, more than one client. Like, I could manage just your properties in Arizona and no one else's, and I don't need a license yet. But as soon as I manage a second homeowner's property for long-term tenants, I need a real estate license. And it says specifically that terms of less than 30 days do not, like, the rule doesn't apply. You need no licensure at all. It explicitly says that. So in that state, you need no licensure of any kind whatsoever to manage other people's properties as short-term rentals, as long as they're rented for less than 30 days. And that's really a product of the fact that national fair housing laws only apply to long-term tenancy. Yep. Those laws generally do not apply to short-term tenants, no more than they do to someone staying at a hotel, right? Fair tenancy laws don't apply to hotel stays nor short-term rent stays. So it is state by state. The state of Nevada, there is at least people in the real estate community, like the bureaucrats that seem to think that you would have to be a licensed property manager to manage a short-term rental, but then they make short-term rental operations largely legal or regulatory impractical. So it depends on where you're at. I guess that long drawn-out answer gets us to the conclusion that it depends on where you're at. Yeah.
So I don't know about you, but in the term rental space, property management is just not a profit center. Do you feel like, your management that you're doing for these short terms is profitable? Is it kind of a different model because you do have that increased buffer between your lease rate or your gross leases and what we're seeing on a term? You're probably like 4x what we're doing on a term lease.
Yeah, I would say so. Yeah, and this comes with the caveat that it does depend on the property and where it's located. Real estate, like location is as true today as it was before. And then in short-term rental space, not only that, amenities. But if you have the right house in the right location, it's well amenitized, then yeah, your rents are going to be way more on a short-term basis than they are in a long-term. And the property management itself, I charge 15%. Which is well below the industry standard, but well above long-term management, right? It's a high intensive job. You're constantly dealing with turnovers. There's much more repair and maintenance coordination going on. And in that respect, that's the only thing I think similar to long-term is you're coordinating repair and maintenance, but it's happening on such a much more frequent basis because you constantly have 12 people coming and going from the house, pulling on the towel racks, using all the things. And then you've got to market the property effectively, which is very different from the maintenance coordination. So you got to be pretty savvy on all those fronts. And I think most property managers are charging 25-30%. And so that's very lucrative if you're charging that much of the rents, which are 4x long-term. We charge 15 and we found a way to be profitable at 15%, even with the high operational, the intensiveness of it. And I am currently in the process of growing that management business. In fact, I hired sales reps to do just that, to go out and find us more homes to manage. So I definitely see opportunity in that space. Incidentally, Vacasa is really the only publicly traded short-term rental property manager that I know of. If anyone knows of any others, let me know, because I've been kind of researching them, and they are losing money hand over fist. So you can go see their publicly recorded balance statements and cash flow statements. They are losing money hand over fist. Their earnings per share has been negative for years. So that's where I see the biggest opportunity is we've figured out how to be profitable at 15% on a much smaller scale than Vacasa. But if we can scale that, we could be the first or one of the first publicly offered short-term rental management companies that's actually paying dividends and being profitable.
That would be awesome.
Oh yeah.
So you had a couple of things that I want to kind of tug on. You were talking about marketing effectively for the short-term rentals. I don't know if you want to give the listeners any tips about what you do differently to kind of get your stuff filled and keep it filled and keep your occupancy rates higher.
Yeah, happy to. Search engine optimization is a big thing. And, being on page 1 of Airbnb is important.
How do you do that?
There's a number of things that we do. I mean, we have software that tells us what page we're on, first of all, so we can track it. And then we make changes to the listing. We change the description because, if someone's coming to Las Vegas, for example, they could be looking for a large home with a pool near the Strip. Well, if people actually type that search term in Airbnb. So we'll just list the title of the property instead of the Las Vegas Oasis, right? It would be large home with a pool near the Strip. So it's the first thing that pops up when people search for it, right? So your title is important, and it is locale dependent for sure. That's just one example. The description is important too, how you describe the property, doing things like copying, pasting good reviews into your description. So as people are reading through the description of the property, they're reading reviews. The pictures are of utmost importance. It's probably the most important thing about your listing. And the first picture is super important. So we're constantly, like this house I'm at right now, we literally had our photographer here yesterday. Yeah, I think it's his 4th or 5th trip to this house. We're always improving the photography, and we pay a professional to do it.
Yeah.
In fact, the professional in this house that we pay only shoots real estate photography. So we take a lot of care in the pictures, the order of pictures, so everything about the listing, we just make strategic changes to it. And then we watch how it performs on page rankings on Airbnb and strive to get to the first page. So that's one thing about how you market. If you're on the first page on Airbnb, you're also probably very well ranked on VRBO, bookings.com, wherever else you're listing. And that's another thing we do. We go across as many channels as possible. So we use a channel manager that gets us on, all the top channels. Airbnb is by far number one, pretty much in every location, but we do see some locales as well that get a lot of European visitors, for example, if you're near the Grand Canyon. So bookings.com is pretty popular in Europe. So we'll get a little bit of heavier bookings.com in some locations than others, but Airbnb is by far number one, no matter where we operate. So we push across multiple channels. We collect emails of all the guests that come and then remarket to them. So I don't compete with Airbnb to get the initial booking, but like if they ever come back to town, I want them to come back to us and book directly. So there's a handful of things we do.
That's awesome. I mean, there's so many strings I can pull on here. Just going back to the pictures, do you do it the same way that you would see in like a for sale listing? You start with the exterior shot and then kind of work your way through the foyer into the living space, into the bedrooms? Or do you find that, because on the MLS, we have to put the exterior picture first. That's like a regulation.
Yeah.
You're not bound by that same regulation. So do you find it's better to have like a picture of the pool or, a picture of the amenities? What do you put on for your first picture?
Yeah, we'll usually start with the most awesome thing about the house, which in a lot of cases will be the pool or the backyard, or the common space. So yeah, where everyone is going to gather and hang out is usually where it starts. And then diving into the bedrooms. And then we do a lot of real estate photography, especially for sales, is mostly about like getting really wide shots that show like how big the space is. And in Airbnb, it's like almost never the case. We're usually getting much more narrow and honing in on the amenities that we have to offer you. Like here is a really cool little bar space or we get a picture like right behind me of the pool table and the chairs right near it, and just that little spot, right? That little hangout spot. We'll even dive into like some really cool like decor on a shelf. Just to show you like
be real type stuff.
Yeah.
Do you do any that are staged with people? Because I'd imagine that could be pretty powerful too.
Yeah. From time to time.
Are they always? Yeah. Okay.
Yeah. From time to time, if it's a really great place to gather, the more high-end luxury properties or bigger spaces. Yeah. We'll absolutely throw some people in there.
Very cool. And what do you do for your SEO, and which software platforms are you recommending people check out?
RankBreeze is the only one I even know of that provides SEO for Airbnbs. There may be others. If you hear about them, let me know. RankBreeze.
RankBreeze.
Mm-hmm.
Okay.
Yeah. It tells you what page you're on Airbnb.
Awesome. And so how many, actually, let's dive back to the part. You hired some people to go out and get these rentals for you. I think that's awesome. It's probably one thing in my business that I should be more focused on is like acquiring more units under management. How have you found to pay them? Like how do you pay? Is it commission plus wages? And how's that going?
Yeah. So this is an experiment I've only been doing for going on 3 months now. Because I was tired of prospecting myself and dealing with owners of properties in general. Because, you're like, you have two masters when you're a short-term rental manager. You have the owner of the property who cares first and foremost about the property not being damaged and also making a lot of money, which, by the way, are two things in conflict with each other. And then we have the guests. And then we have the product in the middle, that is the home, right? And so we kind of get pulled different ways with those two things. And so that's really the impetus for bringing in sales reps to like go acquire properties by approaching owners. And like, I don't want my operations team to ever talk to an owner again. I want them to talk to customers and satisfy their needs. And your job is to explain to the owner why we're doing that. And so we don't have to constantly explain to them. So the classic separation of sales and operations, right?
Okay.
And then we're only dealing with one account executive who has 20 properties rather than dealing with 20 property owners. So that was the impetus for it. So far I've only hired people I know. I have two, and one I knew well. One was a referral from someone I knew well. And I'm paying 100% commission, although I do offer a draw as well, so that you can get a weekly draw while you build up your book of business. And essentially they're getting a slice of the commission earned, right? We charge 15% of the revenue that your property generates to manage it. So we're giving our account executive a slice of that so that they're getting recurring income. And the way I have it structured is, once they're at 50 accounts, they're making, 15 grand a month or better. And that could last forever. So that's kind of it's a little bit of money up front to put in the legwork. And having another job is fine with me too. We're just kind of getting started with this, but that's the general structure. They get a piece of the commission and recurring.
Okay. And what are your KPIs like right now as you track these guys in the field getting you units? What's your goal as far as, hey, I'm paying you this salary and that's coming out of my pocket. So we got to make sure that you're delivering on your unit count. Like, what are you trying to hit and what are they doing?
So the current business plan for both of them at this point, it started with looking for homeowners, because if you can find out the property address of an existing Airbnb, then you can find out everything you need to know about who owns it and how to get in touch with them. So we kind of started with that. But then we've realized that our actual best referral source is real estate agents and property managers in particular. In Lake Havasu City, I got a guy that I've known there for a couple of years that has 200 long-term doors, and he just bought a company with 400 more. So it's got like 600 doors long-term, and they constantly turn people away that come in and ask if they'll manage their Airbnb because they don't want to touch it. Right. And now we've worked out this arrangement where they send them to us, and they're a great referral source because they, instead of saying no, they say, yes, you can talk to our short-term rental person. Right. So now at this point, they're going out and just talking to property managers and starting their phone call with, hey, I'm a property manager too. They have a little script. I do want to ask you, are you saying no to people that come and ask you to manage their short-term rental? And if the answer to that question is yes, I am saying no to them, then they engage with them. So their KPI is initial conversations and follow-up conversations. Those are the biggest in any sales job. Comes down to how many conversations you have about the product, right? So initial outreach and then follow-up.
Yeah, that's genius, because I would tell you, I do have people from time to time that come to me that want us to do short-term, and I just have to say, I don't do short-term. And I don't know what markets you're servicing, but if you need more referrals in the New York area, I can certainly give you some.
Send them my way. Absolutely, man. We'll work something out too. And I always, I want, we're doing it so that it's, that the long-term rental guy gets, because we need their help in a couple other ways. So we'll give them a slice of the commission as well that actually comes out to about how much you'd make on managing a long-term rental. But instead of managing it, we will, and then we'll use you as a resource for getting people that we need on the ground. And also like keeping that relationship with the homeowner warm. Yeah.
That makes perfect sense. That's awesome. So how many different states are you servicing right now?
We're in 3. We got our eyes on Texas too. And honestly, at this point, we've built out the infrastructure and the team members operationally that I'm confident we can service anywhere inside of the 48 states in this.
Okay.
Yeah.
And you're working on a fund, right? And so like another one of your projects is to bring more units under your management company just by finding other investors that want to take advantage of these really, really great returns, right?
Exactly. Yeah. I am, we got a couple guys in our mastermind that I've partnered up with, and we've been working on this for several months now. And we're about 2-3 weeks out from launching
awesome.
A fund, a 506c accredited investor fund. And we're going to raise 10 million and just take down short-term rentals. We have no geographical boundaries outside or inside of the US anyways, but our game plan, we have several markets on our radar, and ultimately our plan is to get into, start with the first market, which will probably be somewhere in Texas, East or Central Texas. It's just where I'm currently seeing the most opportunity. And anyways, get into 3 to 5 markets as we start doing deals with the cash and stick with those, and realize the economy of scale that you can by having multiple homes in one market, and the diversity of risk by being in more than one market.
Okay. Now, is that kind of like a blind fund then, because your investors aren't going to know exactly which properties you're purchasing yet?
Correct.
Okay.
Correct. Yeah.
Awesome. So
we are the operators too. So we,
yeah,
we're selling our expertise and our know-how to find profitable properties.
Yeah. Yeah. That's great. And what have you learned over the last couple of months as you've launched this fund?
Man,
I'm sure you've learned a lot, but
yeah, I think the biggest thing, so a couple things really. I've been really more working on the marketing piece and getting myself, like I said, it comes down to conversations, right? So if I want to raise money from people that I don't previously know, I got to be having new conversations all the time. So I've been building out my systems to attract those conversations. I really learned how to get attendance to a webinar, to get people I don't know that are, or at least probably are, accredited investors to show up to a webinar where I talk about investing in short-term rentals. Mm-hmm. So really happy that I learned how to do that. It's going to be a large part of my strategy to raise funds. I also learned a bit more about the due diligence process that I want to do, because I'm still actively looking for deals. I was actually in contract on a deal last week that I ended up canceling, and it was in Texas. And I canceled during the due diligence period. And I really stepped up my game on due diligence, because up to this point, I've only been using my own money. So like I get to a certain point that I'm comfortable with the risk, because it's only my money at risk. Yeah. But now that I'm starting to use other people's money, I actually treated this investment, or this last home, like I'm going to use other people's money. And in fact, I intended to. So I was actually a lot more scared, a lot more afraid to proceed without getting more knowledge than I would normally have been comfortable with. It was just my money. And so I sought out that knowledge. I went on site, met with local operators in this town, made a really good relationship, in fact, with someone that's going to partner with me in finding the right property in this town. And what I found out from this person, that I was actually the wrong house, or at a minimum, the house was needed too much to get it to the point that it could do well, and it wasn't quite in the right neighborhood. And now it's like she literally just sent me a house that's in a neighborhood over that I'm much more comfortable with. So I learned, definitely a lot more about how I intend to do my due diligence in using other people's money.
Okay. Yeah, that's great. So, are you seeing shortages in the markets that you're looking at? I know my marketplace is super short on inventory. So having any kind of due diligence is almost like it's non-existent. I'll just be honest with you. I can't put something in a contract that's going to give me the ability to back out of it, or I'm just not going to have my offer accepted. You're not seeing that.
Yeah, this house, in fact, they're having trouble selling it, but there's a reason. That's part of the reason I backed out. That the house, they had some problems. Good houses, I think, are just going quick. But it's really about the price of the home. So the markets I'm looking at have not had historically really dramatic upward trends in real estate pricing. Even in the pandemic, the pandemic housing boom, there's towns I found, not just in Texas, but a lot of them are in Texas because of their unique property rights structure. But I've seen towns that just didn't have really big upswings, and therefore didn't have really big crashes either. I found towns that just powered right through the real estate recession without skipping a beat. Basically slow and steady real estate price growth over the long term. Right. Mm-hmm. And so those towns have really affordable housing prices right now. And if they have 6-figure short-term rent opportunity, then I don't care if I'll be competitive, right? I'll be the highest bidder on the property, because it's just priced so appropriately anyways. I wouldn't even mind if I got to pay a little bit more, but generally I'll just come in at list price, nice and clean. And if you can do that, really quickly after it comes on the market, you're usually getting the deal.
Yeah. Even with a contingency for some due diligence.
Yeah. No, for sure. I mean, on the single family space, I feel like that's still expected for the most part. People are going to do at least a little bit of due diligence.
Cool. So how are you identifying these areas, and why do you think that they're an anomaly to kind of these other metros where we've seen ridiculous price increases?
Yeah. Last year, at the end of last year, I was engaging a fund manager on helping him build a short-term rental fund, and he was really worried about recession. So he was like, "Let's just keep an eye on the market and look for the bottom because I think a recession's happening." And so I really dug in and started doing research, and that's when I discovered, because I wanted to know, like, my first question was, how do you identify a bottom? And the answer to that, by the way, is you can really only tell looking back. And once you've had about three, it's very clear when you're in a real estate price recession. We've all seen that firsthand. But there were false bottoms along the way, and it becomes pretty clear once you've had 3 consecutive quarters of positive price growth nationally. At that point, it's pretty safe to say that the bottom is 3 quarters behind us. In doing that research, another thing I noticed is that there was a lot of locales that not only never had a bottom because they never went down. And so that was kind of like the aha moment or the light bulb moment. And I started looking specifically for those types of locales that just appeared to be recession resistant or proof. Mm-hmm. And they had local economies. So, college towns is one example that like don't really have recessions. There are vacation locales that are there's some vacation locales like Las Vegas that are really sensitive to recession. But then there are others I found like the Texas Hill Country and then some places in Wisconsin, Ohio, there's just these places that tend to be well-traveled and tourized regardless of what the greater national economy is doing. And I think it has something to do with probably like being surrounded by resilient economies anyways. Because economies are definitely local, just like real estate is. And so I just happen to find vacation economies that seem to be pretty resilient too. And that's the main thing I've been looking for. You do sacrifice a bit on return, but I think you stave off a lot of risk of really losing your ass and securing an asset that will be stable, both in terms of its ability to appreciate and cash flow in any economy.
Yeah. So in those stable markets, what are you expecting for appreciation? Are you thinking like 2% is probably your norm, or with inflation, maybe it's a little bit higher, or what are your thoughts?
I underwrite to 3% appreciation, 3%? But okay. But like my expectation is pretty optimistic because like in this town I was in again last week, like year over year price appreciation for May 2023 is 6%.
Okay.
Right. Like even with the big slowdown in real estate or whatever, the inventory is still very low by historic standards. And I don't see any short-term solution to that problem. So I think for the next at least 5 years, we're going to get above average growth. And my expectation is more around 5 or 6% in the locales I'm looking.
That's amazing. All right. So basically your model is, I'm going to find these little anomaly towns where they've got really great economies, and I'm going to find the spots within those areas that people like to travel to. I'm going to get them underwritten well, and I'm going to put them under my management, and I'm just going to keep building that up.
Exactly.
That's beautiful. So while everybody else in the commercial space has put their pencils down because they can't find anything that works, you're like, no, I'm going full speed ahead.
Oh yeah. I'm super excited, man. Yeah, I just had a deal come through my inbox today, and I have an offer out right now on a property last week that I'm pretty excited about. It actually has some problems, and I was a little aggressive on the offer, and like to my knowledge, to this point, they have still gotten no more offers, so they're coming back to reconsidering mine. And then I got another one in my inbox today that I'm look pretty good. I'm seeing a lot of opportunity right now, and just a lot of little ways. There's still people that have a problem selling their home out there that represents a good short-term opportunity, needs a little work.
Yeah. So you're telling me. I mean, I've got one that I thought would be a phenomenal, Airbnb. I've got no Airbnbs, so I don't want to like sink my teeth into something I don't really know much about. But it's near Watkins Glen Raceway. It's got a view of the lake. It's on 3 acres. It's got 7 bedrooms. I'm just like, it's on the wine trail. So there's like, countless wineries around that you can literally ride a bike to or walk to if you wanted to. And I'm thinking like, somebody's going to snap this up as an Airbnb. Like, it's going to be gone in no time. And it's been on the market for a few weeks. We're probably at like week 3 now. And we've had a couple tire kickers come in and like offer the woman less than she paid for it 7 years ago.
Wow.
And, finally I'm getting, an okay offer. It's still not where we wanted it to be. But I'm thinking, like, is it just because it's like kind of a remote place? And when I look on the MLS, there's nothing for sale there either. So it's like, it's not even like, I just don't get it. Maybe it's because it's a value add and it needs work. I mean, I don't
I think
know.
that's part of it. That's the house. I think I saw that one a couple weeks ago when you first listed it, right?
Yeah. Yeah.
I could tell you a little bit about my thinking on it.
Yeah.
So when I see, so first of all of the really high performing homes are on the other side of the lake.
Okay. Yeah. The
And when
wine lady did mention that to me. She said the other side has more nightlife and that everybody on that side kind of shuts down the business at like, 10 o'clock.
So there are people that are pioneers in the short-term rental space where they'll go into a locale that does not have a high-performing home and they'll install it. They could also lose their ass, and I've seen it happen. I've seen people go in and put together fabulous, expensive homes in locales that don't have that yet. And guess what? The reason that they don't have it is because there's no demand for it.
Yeah.
And they've got the opposite of a cash cow, right? Just draining the money. And I don't like to do that personally. I like to go in places that have known success stories, and then replicate that success. So that was the first kind of red flag, if you will, that I saw on that particular property.
But you also noticed that, like, okay, so if you remember where it was on the lake, at the bottom of the lake is Watkins Glen, which is a town, and there's a ton of VRBOs in the town.
Yes, in the town.
And this is what, like 5 miles away?
Yeah, location, man. It's so important.
5 miles, though.
I know it sounds crazy, but 5 miles could make all the difference. Now, I would do that deal if it was 100% seller finance, because there's a lot of risk in the value add work you got to do, that you don't recoup it. So, and I do see the promise on it. Generally with lakes, I mean, there are some lakes that I would only do a deal on the lake. If it's one street back from the lake, I won't do it. I don't care how nice the house is, because like there is a literally 50%, you will make 50% less on a street away from the lake. So that's not a mile, that's a block. Right.
Yeah. Right.
So location is super important. I know in the town of Watkins, the town, there's some really good performers in the town, and then in the kind of the countryside on the other side of the lake. And that's really it. So that's where I would go, especially if I was doing traditional financing. And then I would take a chance on something that's 5 miles away if there was really attractive. It might not be your seller's best option, but hey, if you guys continue to have trouble, we could work out a seller finance situation, and I'll pay the commission.
Yeah. So my thought was, because it was on 3 acres, not only do you have that 7-bed, 5-bath house, you could install some other units, and now you can attract like parties. I mean, it's like it's New York's wine country, right? So we've got all these limos that people rent and buses, and they go on these wine trails. They stop at every single winery. Most of them want to book someplace to stay. So my thought for this particular location, I get your concerns, is that it's big enough that if you've got that vision and you can do, like you said, amenitize it, maybe you put like three season structures on there, so you could have a bunch of camping happening on the 3 acres with a fire pit, and then you can get bigger parties of people that maybe it's a bridal shower or bachelor party. It's very popular. But I would do
some Airstreams. Yeah. I mean, I like the vision, and it might be worth the risk, because I didn't really see anyone doing that there. And when I do see that somewhere, it seems to do really good. The house needs a full renovation. It's got to be modern. It's got to be as modern as possible. And then the landscaping is probably easily, $30K if it's not 50 or more, right? Because you want to have an oasis in the backyard. And then if you throw in a couple of Airstreams around it, now you've got this great event venue right smack dab in the middle of wine country. I see the opportunity. It would take a good amount of cash to just see if it works.
Yeah. Yeah. What kind of return are you looking for on like a $500,000 investment? Like, what's your rental rate look like?
Yeah, it needs to do at least $100K in gross revenue. You're going to have about a 50% operational expense. So that leaves you with about $50,000 in OI. And that will usually cover any debt service and then give you a nice little return. So, I would at least 20% of the cost of the total cost of the project. regardless of how it's acquired, cash, financing, whatever the mix is, like that's kind of the bare minimum, 20% of the project cost in rents, and ideally 25. If we could do that same $500,000 deal, could do 125, that makes a big difference because that's an additional 25K typically in pure profit, like additional, just higher nightly rates.
Okay. So if we've got people that are trying to think about this on their own and they're going to work it backwards, you basically just go to VRBO, check out the rental rates. What kind of occupancy are you predicting? Is that really location centric too? Or is there kind of like a good rule of thumb as far as how many nights you're going to actually be occupied?
Yeah. I have never seen the value in or gotten too tied to the idea of occupancy. My whole thought is like, make as much as possible for every night you're available. What is the highest dollar amount I could advertise for this night and still book it? Right. Okay. So like occupancy should generally be as high as you can possibly get it and still be profitable. Almost, I think of it more like how you think of airline seats. Mm-hmm. And I think hotel rooms are actually very similar to airline seats. But I always look at that. So, I try to get occupancy as high as possible. Now, that said, what I've seen is like 70 to 80% seems to kind of drive the highest revenue, which is really the main thing that you want to do is drive as much total revenue as possible to the property. And I think of it over the course of a year because you really got seasonality to consider. So 1 month, your occupancy is going to be less, and so is your average daily rate. And, on other months, both are going to be much higher. And so I look at the course of a whole year. I think, what could this property do over the course of a whole year? And then to get that information, I do a comparative market analysis, very similar to how you would do it in real estate sales. And I use data sources that tell me, how much the local VRBOs and Airbnbs are making on an annual basis.
Do you see a change in seasonal occupancy based on the locations that you're familiar with? And would you expect that if you started going into new markets, you'd really have to hone in on that? I would just be worried in a market like mine with my harsh winter versus the areas that you're real familiar with out west, that maybe I can't hit that 70, 80% because I've got this winter where people are like, I don't really want to do anything. I don't want to go rent an Airbnb.
Yes, absolutely. And I try to find ways to overcome it. So college towns I found are really slow in the summer, really slow. But I know of this college town that has really hot summers and low population and very little reason to visit. But there still are people that visit. And so if you have a home with a pool, you're probably going to capture those visitors, right? So that will help like dilute that seasonality and make it a little bit more consistent. There's also towns that have harsh winters, but they also have a ski resort. And so, and then they also are great places to visit in the summer. So then you kind of don't have seasonality. So I absolutely look for towns that either don't have too much seasonality or there's a pathway to beat the seasonality.
Okay. Now, as a homeowner that has a pool, I got to ask you, how is your property management dealing with pools? I mean, that's got to be so intense. You got chemicals, you got cleaning, you got, making sure the pump's not going to run dry because maybe evaporation or whatever. That seems to add that 15%. I'm thinking, maybe that's not enough if you got a pool.
I invest a lot into automation in the pool. So I have this one pool that I've spent, I think, $10,000 just to have a pool heater installed and to make it manageable from a cell phone. And also the guests can't, it's locked off from the guests. Like the interface on the pool heater itself doesn't work anymore because it got connected to a really expensive device that makes it managed by a cell phone instead of the buttons on the unit. Chlorinators are helpful. Your pool service is going to be twice a week in some cases instead of once a week. And you're really heavily reliant on having a good pool guy. So that's some boots on the ground are super, like your most valuable asset. So a good pool guy is also incredibly important.
And then you just bill the owner back, right? That's not something that you've got to eat as the manager. That's going to be a pass through.
Correct. It is a pass through, but our system is that we collect all revenues and pay all operational expenses. Pay all the vendors so that the owners aren't coming out of pocket for that. They just get a check every month and they pay their mortgage and basic utilities. And we charge extra too. Like when you have a heated pool, I'm charging you $125 a night to heat it. Right. Yeah. So you usually have margin there. Like your gas bill is less than the additional revenue that you brought in. Never mind the additional revenue you brought in by having a very attractive home to rent. So,
okay.
And if you're in a winter climate, heated pools they actually have a greater effect on your revenue in those places than like in hot climates, right? Like, yeah, you're going to get more money in the winter because your pool is heated and so it's usable. But like in somewhere like Denver, Colorado, which has very few pools anyways, like people just don't get pools there, right? So like where compared to Phoenix, where like 50% or more of the homes on Airbnb have a pool with them, right? So like it's expected to have a pool. Whereas if you go to Denver, for any particular weekend, if you have a pool, A, and B, if you have a heated pool, like you're probably the only heated pool home available in December for the particular weekend that someone is looking for. You can charge top dollar.
Yeah. I would imagine selling the PM service has got to be somewhat complicated with all these little nuances that you could run into with a short-term rental. Right now we're talking about pools. So your people have to have the script for how do we sell them on the pool, and, the gas bill and installing a heater and all the amenities. What do you find for onboarding? Like, is it a couple hours to get somebody really signed up with you and dialed into all the different details that you need to go over, or how does that process work?
Yeah, it's typically days, to be honest.
Days,
yeah, because the initial conversation generally starts with, well, I always like to start with getting the address, ideally before I even have an initial conversation with them, because I don't touch a home if it can't make at least $75K in rents. Everybody, like, once you're below $75K, you're usually in a situation where the only people making money are the cleaners.
Yeah.
The management company isn't making as much as they prefer to make, and neither is the owner. And the owner's frustrated at the managers who are not making enough money to be dealing with a frustrated owner. And then the cleaners are like, don't shut it down. We love this home. It's like, of course you do,
Yeah. You always get paid.
So step one is figure out how much can the home make. And I usually send over a revenue analysis to the owner right before the initial conversation. And then what that initial conversation turns into is generally a million questions, because they've probably had bad property management. Like, we just went down a rabbit hole and we have not barely scratched the surface when it comes down to it. Yeah. And so you go down that same rabbit hole with an owner. They ask you about all of the things and how do you deal with it. And like, we've figured out how to deal with it all because we are investors first. I started this management company because I was buying Airbnbs and I couldn't find competent management. And I had some partners on one Airbnb. And so we formed a JV and started a management company for our own properties. And then people just started coming to us asking for help. So like, we treat all of our clients' properties just like our own, and we have all the same problems and concerns. Managers charging way too much and doing way too little. Like, we get it. So like, we have an affordable rate where you also get to make money too. We provide really good advice on how to maximize the revenue of your property, because like we're deploying that advice we're learning from our own properties and then deploying it across our management portfolio. So, we kind of just like once they understand that, like who they're dealing with, like, no, we are problem solvers. We're constantly improving. We're constantly finding ways to make more money with the properties we're managing. We've dealt with all the problems that you've brought up. We have a solution for all of them. And we're always open to new ideas as well, by the way. So like, if you got some good operational strategies or ideas, like, we'll give it a shot. Like, we're open to it. We want to always be better, because we're never going to be perfect, right? So we can always improve. So, we just kind of relay that to the property owner, which takes some time. Usually you can kind of get them to that point on the first conversation. It takes about an hour or two. Like, that's a great conversation, by the way. If you have an hour to 2 hour long initial conversation with a property owner, that's a good conversation. You're probably going to convert them, but they're still probably going to want to do some due diligence. They want to see your contracts. They want to, I also, as the manager, want to get a more detailed look at your home and see if there's any improvements we can make to drive more revenue. We generally will send them within a week of that first conversation a more comprehensive competitive analysis than is done with like the initial revenue analysis, where we go through the house space by space and say, this is what you have, this is what you need, and this is also what you should get to be competitive in your neighborhood. So we'll do our homework and like kind of do our due diligence on like, do we want to manage it? And like, how do we want the home to be staged and designed for us to management and really make as much money on this place as possible. And once we send that to them, then it's time to close the sale. And like, hey, who's doing this? Are you doing it, or are we doing it? Right? Because we'll get the property to the point it needs to be, or we'll hire out to get it done if you don't have the time. Or you can basically use our proposal as a checklist, for you to like upgrade the place. If it'll make enough money as is, we won't require you to do it, but we're always going to explore, like, how do we squeeze every dollar as possible out of all of the usable square footage on this property inside and out. So we explore that, we decide what's being done and who's doing it, and then we move to close.
Nice. Well, I mean, hopefully we can get you some business through this, because this has been amazing information for anybody that's on the fence about doing Airbnb. And with everybody in pencils down, it's like, why wouldn't we get into this space? Do you charge an onboard fee, like for that
Absolutely.
2 hours that you got to go through? What does that look like as far
we
as
charge $1,000? $1,000, and it gets you a fresh set of pictures, which are probably $500.
Yeah.
And
so
then we're
pro photos included.
Yeah, it comes with pro photos. We also take on additional expenses to bring on every property. Like it's like a $20 surcharge here to add you to our search engine optimization installer, $20 here to our PMS system, 20 here, 20 there. At the end of the day, we're actually only making a few $100 on that onboarding fee. And
so all that stuff is included in that $1,000. Okay.
Correct. Yeah.
And then is there like a minimum term that somebody have to be with you? And if they don't meet that minimum term, is there like a cancellation fee?
No, there isn't. 30-day cancellation notice. If the relationship's right, we don't need to lock in.
Okay. 30-day cancellation. And then have you ever thought of starting a mastermind for this? Because I feel like it's a wide open space. You're one of the only people that I know that's trying to do this on a scalable, I know a few operators here and there that have some units and that are maybe doing some arbitrage, but nobody's really, I don't think, looking at it the same way that you are. Have you thought about doing some kind of mastermind where you guys could coach people into your model?
I have, I'll be honest, I'm not terribly interested in coaching. I love investing. I really enjoy growing the management company as well. And that's really where I want to live. I want to be a resource to my sales reps so that they can answer questions as confidently as I can. And I want to invest in real estate and deploy capital into cash flowing real estate assets. But what I have considered doing is starting a mastermind for property managers, because one of the bigger lessons I've learned in business is don't be afraid to share. I'm an open book. If you think you can do it at my level, go ahead, and I'll tell you everything I'm doing. But I'm executing this way currently. Right. So I'm perfectly comfortable with sharing everything I'm doing. I'm an open book, and I want to start a community of people just like that, so that because I love dealing with people like that are open books, because we can just learn from each other and we can both be better because of it. And so I have considered starting that type of community of other property managers and multiple owner operators, just so that we can all really learn from each other.
Yeah, no, my thought on the short-term rental mastermind was that the reality is most people are going to come to you and we're going to realize how freaking hard it is and how much time it takes. And they're going to be like, you know what? I want you to do it for me. That was kind of my thought process.
Absolutely. That's it's like anything. It would take time to set that up, right? One of my strategies is I train real estate agents to help their investor clients identify profitable short-term rental investments. And I invite them to this webinar and I show them how to do that. And then they're like, oh my God, I just sprayed them with a fire hose of information. And now they're dripping wet. And I'm like, here's your towel. It's me doing it for you. By the way, you're a successful agent. I can also do this for you. Right. And I can help your clients. And so I'm kind of knee deep in that. And a coaching business. I have a friend that's doing a coaching business. And here's the thing. Here's the real big thing, man. What I've noticed, the people that are looking for coaching they're not high income earners. Mm-hmm. Someone that makes a lot of money doesn't want to coach. They want to give you their money. Yeah. People that want coaching kind of want to bootstrap getting themselves into this industry. So that's really the number one reason I've kind of avoided coaching is that's actually what you're looking for. You're looking for someone to hold your hand through the process. And I don't have time to do that. Yeah. I want people that just are that see that I know what I'm doing. And they're like, here's money, Trevor, go. Mm-hmm.
Yeah, that's a good point. That's so cool. So for your training to realtors, that's basically just a webinar. Have you thought about fleshing that out anymore and making it a little more, 24/7 available as far as content?
Yeah, I am building out everything about that. I'm currently building out my email. I have Jason Wright, who's in our mastermind, building out my email campaigns and systems in general. That's going to take people from that webinar and pull them into my ecosystem that has all types of other knowledge and information. I am building out a YouTube channel that's just kind of full of information. My Instagram is full of information. And so, yeah, I'm definitely like leading with education. Like I said, open book, happy to share anything I'm doing with people. And I'm putting that in all types of different places.
Yeah. I mean, this has been incredible. If people tuned in and listened, they should be able to go out and kind of get their feet wet at least, or call you for a little bit of expert advice, maybe.
Absolutely.
So we're coming up on the hour. Is there anything that I missed that you want to cover? Any shout outs or anything like that?
The biggest reason I'm at the point I'm at right now, it's funny, man. Like sometimes you feel like you're spinning your wheels, right? But then you like talk about what you're doing with someone. And you're like, yeah, I've actually built quite a bit over the last years. But at the end of the day, what I've done is I built a team. Yeah. I have some really great partners that allow me to stay in my space of like grow the management business. I don't operate it. If there's an operational problem, I don't even want to hear about it. Right. Yeah. Grow. I want to grow it. And I want to look for deals. And like, I'm just really fortunate that I have a team, a really quality team of partners and employees that let me do that. So, real estate is best played as a team sport. Absolutely. Yeah, and, absolutely. If you don't know what you're getting into, partnering with someone that does is invaluable. It saves you money and time.
Yeah. So much money. What's the best way for the audience to get a hold of you?
They can direct message me on my Instagram is a good way, or LinkedIn. So I'm Trevor Celso on LinkedIn. I'm at Trevor Celso Actual on Instagram. Or they can email me, Trevor@compoundgti.com, or call me 702-660-1120. Actually, text me. My phone doesn't ring.
Me too. It's on permanent silent.
Mine too. Yeah, mine too. But I will follow, especially if you text me, I'll follow up.
Awesome. Well, thank you so much for coming on. It was really great learning about what you do, and I can't wait to see you back in the mastermind.
Awesome, Mark. Thanks.